we've been looking at the U.S. Housing data here for a while, and really the data's been pretty weak. So we got a print yesterday that existing home sales in the U.S. are basically flat year over year, and really a continuation of the trend since the beginning of the year. So you've got volumes basically flat, prices decelerating. So the overall landscape for the housing market really isn't all that great. And within the housing market, you've got a very significant slowdown occurring, really where you wouldn't necessarily expect to see it. It's in the high end, and what's something that I think is very, very poorly understood, to the point where you go around and meet with institutional investors, and 2 out of 3 of them have never heard of this. There's an interesting program in place where the Treasury Department's Financial Crimes Unit suspected, that a large number of high-end property purchases in the U.S. are really a vehicle for money laundering from foreign buyers. And they commissioned a study that ran 2000 to 2012. They looked at all the transactions from 2000 to 2012, and actually we have a couple of slides on this if you want to show the slides, Josephine. What they found is that high-end property prices over $5 million nationwide from 2000 to 2012, almost half of them were bought by shell companies with no named owner. And then if you look at specific markets, for instance, we've got a chart here showing LA, San Francisco, Miami. 51% of LA homes sold for over $5 million and bought by shell companies had no beneficial owner. 48% San Francisco, 37% in Miami. Even in Connecticut, 17% of buyers use shell companies. So it's really pretty pervasive. Nationwide, it's 44%. And so what the Treasury Department decided to do was run a pilot program beginning in March of this year. And they rolled it out in Manhattan and in Miami. And they basically started tracking all purchases over $3 million in Manhattan and $1 million in Miami, and said you can no longer buy these with shell companies without a beneficial owner name. And so the program was supposed to run from March through August, and then they were going to analyze the data and sort of let people know whether their suspicion, i.e. that high-end property in the U.S. has become basically a money laundering vehicle, whether that suspicion was correct. So actually they came out last night and gave a preliminary update on it. And lo and behold, they announced that there is definitely illicit activity behind a significant portion of the cash transactions in the high-end property markets of Manhattan and Miami. And specifically what they found is that, under this new reporting requirement framework where you have to have beneficial owner named on high-end property purchases, they found that more than 25%, so more than a quarter of people buying high-end property in Manhattan and Miami are also subjects of suspicious activity reports, meaning there's an indication of possible criminal activity by those same people. So as a result, what they've decided to do is expand this out of Miami and Manhattan to now include the 3 major counties of San Francisco, so San Francisco County, Mateo County, Santa Clara, also Los Angeles County, also San Diego County, all of the New York City counties, so Manhattan, Brooklyn, Queens, Bronx, Staten Island, moving it beyond just Miami to also include Broward County and Palm Beach County, and also going after San Antonio, so the county in which San Antonio sits. So the point here is that this is going to begin to have a significant negative impact on transaction volumes, high end, in these major markets. And if you think about, you think about segmenting the size of these markets, like for instance, if you look at the Case-Shiller 20-city index, The New York market is about 19% from a weighting standpoint, and Los Angeles is about 13%, and San Francisco is about 10%. And then you throw in, really just two more markets, Chicago and Dallas, and you've got over half of the 20-city index there. So we're talking about a huge rollout for this program, and foreign buyers are a major component of these markets. That's the other thing to understand is, for instance, foreign buyers bought $103 billion in U.S. real estate last year, but most of that, so that's 7% of all property transacted in the U.S. last year, but most of that is occurring in the high-end markets of New York, of Miami, certainly throughout California, San Francisco, LA, San Diego. So this is going to be a very big development that literally very few people are aware of, and it's going to hit like a ton of bricks over the coming 12 to 24 months. So, from an investment standpoint, be really mindful to the extent that you have exposure to the housing market, particularly the high end of the housing market. So names like Toll Brothers and NVR and these other high-end property developers are all going to be in the crosshairs for this. So anyway, very interesting development on the housing side, and one we'll be tracking closely going forward.